Welcome back. I'm Jesse Baines with Yahoo Finance Canada. You're watching Editor's Edition, and today we're talking real estate with Realosophy Realty's John Pasalis. Thanks for being here, John.
Yeah, thanks for having me again.
And Oakwood Realty's Steve Soretsky. Thanks for being here, Steve.
First one back in the new year. Let's do this.
Yeah, let's do it. Season premiere. I wanted to say Happy New Year. I wasn't sure what the cutoff is. I know Larry David says 3 days, but Happy New Year anyways. And what a year it was for anyone that owned a home. Let's take a look at the latest data from CREA. The Canadian Real Estate Association says home prices were up 2.5% month over month nationally, 26.6% year over year. Now let's compare that to your average hourly wages as per Stats Canada, 2.7% year over year. So you'll notice the cheeky title here. We have your home makes more than you do. It really does when we're looking at these numbers. John, what are we seeing on the ground to get this new year started in the GTA?
Yeah, I mean it's starting off pretty terribly for buyers. I mean, nothing to choose from. Very low inventory. Very competitive market. House prices, especially low rise, are still unbelievably high. Condo markets, it's certainly strong still, not quite as crazy as the low rise market, but last year was a record year for sales, like 120,000 sales, which is the most in history. So pretty crazy market to start the new year for sure.
And speaking of crazy, I want to take a look at some for sale versus sold homes in the GTA. These are from Daniel. He's a realtor. These were on Twitter. They were even on 6Buzz, the meme destination on Instagram, the go-to meme destination. So here's the first one: 18 months, no upgrades in Bowmanville, not downtown Toronto, Bowmanville. So we've got $794,000. 18 months
1.
later, 1.6, and no upgrades. Okay.
Yeah.
Let's look at the next one. I mean, it doesn't get much better. But the next one, we have a nice double, 605 in Kitchener, 1.2. And then, okay, let's take another one. Let's just go through these. $700,000 again in Kitchener, 18 months later. We're seeing it in places like Kitchener, like Brampton. I know the GTA is picking up, but is this just the new norm? I mean, John, is this just, can this continue? I mean, should we just get used to pay? And I've seen some of these listings sold that he's posted, and he's got Vaughan semis at $1.5 million. Not even semis, townhomes for
row houses.
$1.5 million. Row houses. Has the GTA market just gone completely nuts?
It is nuts. I mean, this is not something anybody should be celebrating. I mean, I think people see this type of stuff and they think, oh, everyone in the real estate industry thinks it's great. This is terrible for agents, for buyers. It's not a great market. It's not a great trend. It's not a positive trend. And quite frankly, it's alarming. I mean, anytime you see examples of houses that have doubled in value in 2 years, it's not normal. Usually it doesn't end well. I mean, and not to say that prices are going to fall tomorrow. I think there's probably still some momentum, but I think buyers need to be more cautious. And I think everyone's looking at this and thinking it's normal for prices to go up 40% per year. But it's not. And I think that's going to come to an end probably sooner rather than later.
Okay. Steve, you shared a video on Twitter. You attended an open house in Vancouver. If we could pull that up. And there were lineups. These are people lining up to just get inside to look at this open house. How many people were there, Steve? And what is this Vancouver market looking like right now?
Yeah, that one in particular was, I think there was 200 plus people through the open on the weekend there. I mean, yes, granted, the listing price was, listed lower than probably where it should have been, but irregardless, I went through a couple other opens that weekend, and we're seeing it's not uncommon to have 100 people coming through an open house on a weekend, which is obscene amount of volume. And so, yeah, to start the year, we're just seeing a frenzy. I mean, I don't know if we want to touch on sort of basically how we kind of got here, right? I mean, if we look at 2021 in Greater Vancouver, so we had, if we look at the chart, we had, record home sales for 2021. So that surpassed the 2015 bull market. And, as a result of record home sales throughout the year, we're now starting the year. We finished the year with record low inventory. So we started 2022 with record low inventory. And of course, we've got still a lot of people that are frustrated. They want to buy a house, and January is historically a very slow time for new listings to come to market. So basically any listing that comes to market right now, you're having, 100, 200 people showing up and, 10, 15, 20 offers. And in that case, that video you showed, I think there's 40 plus offers on that listing. So terrible time to be a buyer. I mean, even as a realtor, people say, "Oh, you must love this market. Isn't it great for you?" And as John and I were talking off air, it's terrible. There's no inventory to pick from. It's hard to get your clients through properties. And when you do find something for them, you're competing with 15 other people. So I think it's not a healthy market.
Now, Steve, who are these successful bidders? Who's winning these bidding wars? There's that debate that's, almost never ending. Is it investors? Is it end users? What's the typical victor in this battle when it comes to a bidding war?
I would say it's predominantly end users right now. And I know that's hard for people to swallow because we're kind of looking for that scapegoat. But at the end of the day, what we're seeing is predominantly throughout this pandemic over the last, 18 to 24 months is it's been these young families in particular that are moving out further away from the city into the suburbs, trying to grow a family, working from home, wanting more space. And they've really just inflated this sort of entry-level detached housing market. And again, there's a sense of desperation because I've had clients, no joke, where, 3 months ago, they're in the market, they're looking, maybe kind of taking their time trying to find the right house, and prices have gone up so fast, so quick over the last 3 to 4 months that all of a sudden they're priced out and they're not looking for an entry-level house anymore. Now they're looking for a townhouse. And so that's how quick the market's moved.
John, in the GTA and surrounding areas, I've been hearing this a little bit that the people that had, $1.5 million set aside to buy a home in Toronto or near Toronto, they go to Kitchener or they go to Brantford or whatever, and it's like nothing to them. And they're potentially distorting the markets there, raising the comps. Is that a trend you're seeing?
Yeah, 100%. We're starting to see more of that. And the reality, at 1.5, you can actually still get a house in the Toronto area. But, when we look at the number of sales under $1 million, that has plummeted this year compared to last year. And that's a huge price point because that's sort of the price point where, you can buy with less than 20% down. So buyers whose budget is below 1 million, I'd say they're the bigger ones that are kind of exiting the GTA and moving to these smaller markets because there's not really a lot to choose from in the Toronto area. If you want like a 3-bedroom family home, which is just shocking that there aren't many homes in that price range anymore.
Now, you mentioned that 20% down payment. This was part of the Liberal platform, was to raise that threshold from $1 million to, I believe it was 1.2 million. I could be wrong, but anyway, it's a higher level. Is it time we really get there and make that happen now? Because $1 million isn't buying you what it used to be. Definitely, as we see some sold prices.
That would be like dropping like a can of gasoline on an already blazing bonfire, right? Like that's just going to drive even more demand. If they want to squeeze another 10 or 15 or 20% price growth out of this boom, then yeah, maybe. But it's you don't want demand side policies in a market that's already tight. You let the market adjust, slow down, and maybe in the future they can do that. But I don't think now is the right time to be doing those types of policy changes.
Okay, well, just to play devil's advocate, sure, it increases prices, but does that at least let some people, a larger swath of people participate in the bonfire? Or is that just not the right
the first few thousand who are the first ones to get in and can benefit from that. But within 6 months, that's done because prices will grow, and then all of a sudden, what was the starting point, say $1 million, is now one and a quarter because you can borrow more. It just kind of accelerates the price growth a lot faster. So within 6 months, any benefit has disappeared. And I think that's the problem with it. It's like a short-term fix to affordability, and it doesn't really solve anything in the short or long term. Short term makes it a lot worse.
Okay. Steve, if you have clients or friends, family that you're making recommendations to our viewers, and especially right now watching, you're seeing there's nothing to buy, the prices are through the roof. Do you just wait this out, and for how long?
Look, I mean, if it was me personally buying, an entry-level house in the suburbs, I'd be holding off. But I understand, and that's kind of a lot of my advice to clients is like, listen, you kind of have to try to keep your emotions in check here, and this too shall pass. The problem is there is a genuine fear of missing out. There is a genuine fear that shelter, which is a basic human right or human need, when you've got a young family, they're worried about being priced out of the single family. Like I just talked about, in the show earlier here, the clients that are looking for houses 3-4 months ago are now priced out of that market into the townhouse market. So the question really is like, how much higher can this go before you do have that pullback and likely a correction? Will you be able to get in? And after that, I mean, it's hard to say because again, like, I could tell you right now for a quick example, like I had a client that bought a house last year, literally last November, for 1.2. That same house in that neighborhood is now going for 1.6. He wouldn't be able to buy that house today. He would not qualify for 1.6. So thankfully he got in last year at 1.2 when we thought it was a crazy time to get into the market. So, had he waited, he wouldn't have got in. Now, again, the question is that house going to come back down from 1.6 back down to that 1.2? I mean, I don't know. Maybe. I think that's a pretty large fall. And if that does happen, we're going to have bigger problems on our hands. So it's a tricky one, right? I mean, I would say you got to keep your emotions in check. I don't think you try to chase the market, but it's tough, right? I mean, could this go up another 15% before it finally hits a ceiling? Like, yeah, maybe.
Okay, I know this is something we've talked about, but our new Minister of Housing brought it up again during an announcement of 74 affordable housing units. I know that's not going to change much for our problems here in Canada in terms of housing affordability. But anyways, he did talk about blind bidding. Again, another one of these pledges as part of the Liberal platform. We have discussed that it hasn't worked in other parts of the world in terms of bringing prices down. But do you guys, John, do you think that it could help with just sort of maintaining sanity, going in and knowing that, this is what the highest bid is. If I can bid higher, then I will. Otherwise, I'm going home, rather than, hanging around, waiting by the phone and just getting stressed out, losing bidding wars time and time again. Do you think that would just help sort of buyer psychology, John?
I mean, I think it would help buyer psychology to some extent. I mean, the more transparency, the better. I don't think it's going to have any material impact on home prices, though. I mean, I wouldn't be surprised if it has a more aggressive impact when you see what other people are bidding and you think I only need to pay $1,000 more, $5,000 more. So I don't think it's a solution. I mean, I think it's positive from a transparency perspective. It's like, think about sold data. I mean, everyone we were fighting to make sold data available. Everyone thought that would change everything. And listen, it makes consumers more informed. They have more information, but it doesn't impact home prices. At the end of the day, buyers are still overpaying on homes, even now that they have access to sold prices and can do their own research, right? So I think this is very similar.
Okay. One of the things that I know, actually, you know what? Let me first ask this. During recent conversations, we talked about an intervention not being needed on the policy side because things would eventually balance themselves out. But I think we've had a bit of a rally since we talked last. Do you, Steve, think that government intervention is needed to do like even increasing supply, something? Do you think the government needs to step in here?
I mean, I think the scariest words are from the government, and I'm here to help, because everything they've kind of, touched with the housing market seems to make things worse. I mean, I think the biggest thing really, and I'll stand on this hill, but I really think the biggest thing they can do is raise interest rates. Raise the cost of money when you can borrow money and borrow $1 million mortgage at 2.5% with inflation, getting close to 5% here. I just don't think like these policy tweaks around the fringes are really going to move the needle. So, I mean, I think that we're going to have some liftoff here from the Bank of Canada soon. I think that's going to be the difference maker. We've talked about it on the show before, and I stand by it. I think once mortgage rates go north of 3% and they hold there for a period of time, I think we'll see some slowing in the housing market.
Okay, the market's looking at about a 73% chance of the first hike as early as next week. Do you think that first 25 basis point or whatever, let's say 25 basis point hike will actually move the needle and make a dent in what we're seeing, Steve? And do you actually,
No.
I should also ask you, do you expect them to move as early as next week?
I mean, initially, no, but I mean, I know that the market's pricing in next week as a 70% chance, right? So, yeah, I mean, it's possible. I think they should. I think the Bank of Canada has every excuse to raise interest rates. I know at their last meeting they were saying, not until the middle quarters of 2022. So if they move here in January, it kind of goes against what they said at the last meeting. But again, I think if you look at where inflation's at, consumer inflation expectations are like off the charts. Which is kind of a self-fulfilling prophecy. So I think the Bank of Canada, honestly, they probably should move. And for the sake of the housing market, as someone that's in it day to day, to be honest, I would welcome a couple of interest rate hikes just to cool off the markets. It's too hot. It's hard to get things done. So, I mean, that's kind of my view of it. I don't think that 25 basis points is going to materially change the market at all. But, once you start getting in 50, 75 basis points, if you get that fixed rate up to, again, sort of 3% area, then I think that takes some time. Because you have to think about it in the way that, most buyers are kind of pre-qualified with their interest rate hold. Those usually last for, I think, 3 to 4 months. So it's kind of like once those rate holds start to expire, and they have to sort of come to the new market rates, that's when you'll start to see sort of that filter through into the housing market. So,
okay, I want to move on to questions, but real quick, what's your take, John?
Oh, I agree 100%. I mean, 25 basis points isn't going to change anything, but the expectation that rates might go up, a full percentage point by the end of the year. We could definitely see a very different market in the second half of this year if they start moving ahead with more rate hikes. And I think I agree with Steve. I mean, it'll certainly be welcome to take some of the heat out of the demand we're seeing right now.
All right, let's move on to questions because we have a few. Let's start with Imran. Now, I don't know, John, if you do much business in the Windsor area, but it's a timing question. Maybe you can apply some sort of seasonality to this, but is it possible for you to tell me what would be the best time to buy a house in Windsor? I'm doing an average job and have a family of 4. Your opinion or response will be highly appreciated. Again, I don't know how much business you do in Windsor, and I don't know the correlation between the GTA, other parts of Ontario, and Windsor, but maybe a time of year that is better for Imran to start looking.
I mean, I'll say in most cases, even in the GTA, the first quarter of the year is actually usually the worst time because we find, at least here, is like that's when most buyers jump into the market because they want to buy in the spring and they know it's going to take several months. They have the highest number of buyers, you have the fewest number of listings, and you end up with like 30, 40 offers on homes. And that was even before COVID, that was the norm. So I wouldn't panic about 30, 40 offers now. Usually what happens is as we move to the spring market, 10, 15,000 buyers get out of the market because they buy, and then there are more listings on the market. So it's usually less competitive as we move to the spring market. People think it's hotter because there are more sales, but there are also quite a few more listings. So usually ends up cooling down. I'd say late spring is kind of when things ease up usually.
Okay, let's move on to William Chemko. William tells me he's 78 years old. You hear the story all the time. He was paying 20% on his mortgage. So he's frustrated and wants your take. Low interest rates have created the market we have today. New or first-time buyers do not worry about ever paying off their mortgages, including my children, who now earn several times what I did back then. So who's better off? I still managed to eventually pay off my mortgage and own my own home. I doubt if my children will ever own their homes and both continue to rent. I only see the banks profiting from the current situation. Steve, what's your kind of response to William on this? And, just as generally, how do you respond to people who feel this way? They grew up in a different time, rates were different, everything was a lot different than it is today, and they're worried about their kids.
Yeah, I mean, it's a tough one to sort of answer in a short, 30-second blurb here, but I would encourage anyone to go check out Ray Dalio's work on the long-term, debt super cycle, because I think we're kind of at the end of that, right? Which is like, you've kind of levered up the global markets to a certain extent where, like this debt realistically, not just in the household level, but a lot of it in the private public sector won't be paid off. And so it's a tough one. I think the biggest thing, if I can kind of simplify things, I do think like going down the current path that we're on, and we certainly see it in the Vancouver housing market here, is like you're seeing this massive wealth transfer, right? So, the older generation, the boomer generation, whatever you want to call it, has benefited enormously on, falling rates for the last 25, 30 years. And that's inflated their assets. And the only way to sort of keep that going is to, continue to sort of support the housing market and support the market in general. And so what you're seeing is basically parents now that have become multimillionaires just on owning, a single property, are now taking that equity and passing it on to their kids. And again, when these parents eventually pass away, I think they'll be passing large nest eggs onto their kids, which I suspect is going to be the one argument to support current valuations.
Okay, thank you, Steve. Next, we have Chris. Chris asks, this is for John because this is in his neck of the woods. I'm looking to buy a condo in the Mississauga area in the near future. I've been talking with several people and getting various opinions, and some say that I should wait until spring to buy, where others say to buy now. But on the other day on the news, it was reported, hopefully our news, but anyways, it was reported by someone that prices will likely go up this year. I was hoping you guys could give me some sound counsel and advice on what would be best. Let me just backtrack a little bit. I don't want anybody to have FOMO by reading anything on our website, but there are a lot of projections and estimates. Few people that I've encountered are predicting prices to fall in the beginning of the year. So that is a thing that people like Chris are worried about, John, that prices are going to go up. But if I don't buy now, I'm screwed. But there's nothing to buy, so I'm screwed. What should I do? What should Chris do, John?
This is actually a good question. And it's kind of like in some ways related to the last question we had about this, when is this the right time to buy? And my advice always is not even to try to time the market. Like, you need to find value, in the property, not in the market. Sometimes the market can be very competitive, and the right property or unit comes up that has terrible photos, isn't staged well, is tenanted, doesn't have a lot of showings. And you can still get some decent value, even in the first quarter of the year when it's really busy. So, my advice always is not to try to find the right time to buy, because, you don't really know. It's always just better to be active and to try to find opportunities or value, even in competitive markets. Sometimes you can do that if you're creative.
Okay, thank you. And now let's move on to the next one. This one comes from Ifosa. I hope I'm pronouncing your name correctly. Asks, what sort of policies? We've talked about this a lot, but let's. This is an important topic that people are very interested in. What sort of policies should the government at all levels take to push the real estate market to a more balanced market? I hear a lot of talk of dampening demand, but to be clear, that means telling first-time home buyers their dreams of owning a home can take a back seat. Steve, I know we've talked about interest rates, but is there something else that can potentially work in this sort of situation here?
Yeah, it's a good question. I guess my comments are, again, I'll quickly briefly touch on interest rates, because the Bank of Canada has written a thing that, and several central banks are well aware that these low rates are creating larger inequalities, because the people that have access to the cheapest credit are typically, already people that are already wealthy. It's asset rich people that can leverage existing assets to tap that cheap interest. And so the only thing that I can think of, besides, again, obviously normalizing interest rates to some extent, the only other thing I can think of is what you'd have to do to try to like at least somewhat balance things out a little bit is you have to make qualifications for investors a little bit more stringent. And at the same time, if you really want to go the other route, could you loosen lending requirements ever so slightly for first-time home buyers while also tightening for investors? That will at least somewhat level the playing field. That's really the only thing that I can think of that, at least from like a demand side perspective, everybody knows, yes, we can try to build more homes, get rid of some of the red tape. But if I'm thinking quite easily, could they come up with a policy, tomorrow that would try to alleviate some of these sort of inequality issues? I think those are pretty obvious.
Okay. Speaking of investors, John, I know in a recent chat you mentioned that 50% or more are your calls you're getting are investors. Is that still the case? And do you think targeting investors the way Steve just suggested would be a good way to slow things down a little bit?
Yeah, I definitely think out of all the measures that, the only measures that can cool the market, in the short term, in the like 1 to 2 years, are demand side policies. We can't build fast enough or put in supply side policies. So certainly, I think when we look at what's going on, the Bank of Canada just had a note showing, that demand and sales from investors is really outpacing the other buyer segments out there, including first-time buyers and repeat buyers. And they still make up a smaller segment of the market. There's only about 25% of buyers. But, in the housing market, when you have this surge from investors, it doesn't have to be a huge surge. This is really what made Toronto's housing market a bubble in 2016 and 2017. Investors were still only, on an aggregate level, only about 25% of the buyers, but they inflated the market. So certainly I agree with Steve, like in the short term, those are probably the right policies to do to take some heat out of what is a very, very competitive market right now.
Can I just hop in there quickly?
Yeah, please do.
Yeah, because John, I don't know what you're saying, but like one of the big trends that I'm seeing personally is that, the investors kind of get framed as these really bad people, and these predators that are like gobbling up all the housing supply. What I am seeing, like a big trend, is that young families that are already in the housing market, like they've got their detached house, but they've got 2 kids or 3 kids or whatever. They're seeing what's happening in the housing market, and they're like, wow, like I want to go out and buy a 1-bedroom condo just so I can have, I'm worried about my kids not having housing in 15, 20 years when they're grown up. And so I want to go out there and buy, another condo or go buy a pre-sale condo so I can, pass this over to my kids in 15 years. So that's a lot of the kind of investor that I'm seeing right now. It's concern. It's a fear of missing out or concern about their kids' future, really.
Yeah, I agree 100%.
Go ahead, John.
Yeah, go ahead. Yeah, no, that's exactly what I'm seeing. Yeah, go ahead.
Okay. I was going to ask, so you're seeing the same thing, but are those the type of, investors that should be targeted with, for example, a higher down payment, versus are they in the same boat as, the guy or girl or who's got, buying multiple properties and they're buying, selling, flipping houses, and they're more of a professional investor versus somebody who, like Steve just described, like somebody who just wants to, buy a second property or have something for their kids? Should they face higher down payment requirements or other sort of measures, John?
You're not going to get rid of investors in the housing market. They're always going to be there. Like all Steve's suggesting doing, which I think is right, and a lot of countries do this, is just tightening credit, making it a little bit harder for investors to be jumping into the market. So whether you have 3 properties or 1 investment property, I think it's kind of doesn't matter as much. It's it's just basically making it harder to basically invest in single family homes and real estate. In particular in the short term, given that the market's so hot, I think, do we need these policies 5 years from now? if we can get supply to catch up, maybe not, and they could reverse those. But in the short term, perhaps we need them.
Okay, that's another one in the bag. That's our season premiere. Thank you so much, John, for being here.
Thanks for having me.
And thank you, Steve Saretsky, for being here.
Always a pleasure. Thanks for having me on.
And do check out John and Steve on Twitter. You'll get all kinds of charts, data, takes on the real estate market. Meanwhile, if you have any questions, send them on over to me. You can find me on Twitter as well. You can get those questions to me there or email me. Meanwhile, be sure to check back Yahoo Finance Canada, all your news on real estate, the stock market, cryptocurrencies, the energy market, you name it. Thanks, and see you next time.